we're in a bear market. Now more than ever, it is extremely important for all of us to make our own decisions. Don't be swayed by headlines. Don't be swayed by tweets. Don't be swayed by YouTube videos like the one you're watching right now of me. I'm just talking data points. I'm talking my opinion. I'm putting it out there for you just to kind of brainstorm with me. Don't be swayed by that. Dig into the data. Make your own decisions based on what is happening, what you see, what's comfortable for you. This is not financial advice. We have some crazy, crazy cool charts on the Bitcoin technical analysis charts to talk about as they kind of intermingle with on-chain data, as they intermingle with headlines like this. Bitcoin showing bullish signs, exchange outflows see significant uptick. So on the surface, there's nothing inherently wrong with this. Bitcoin showing bullish signs. Of course, it's bullish. Everyone, when people are taking their crypto off of exchange and exchange outflows are increasing, that's a bullish sign. We want to see that. We don't want to see people putting their crypto onto exchanges. We don't. So it's good because when they're putting the Bitcoin onto exchanges, they're probably fearful, thinking about selling, getting ready to sell, planning to sell. We want to see it come off of exchanges. Now, I wanted to dig into this though, because on the surface, I think it could be a little bit misleading. It could offer a little bit too much hopium. And I think in the long term, this is bullish. This is what we want to see. Things like this happening. We want to see these data points kind of formulate, and we want to see them just add on top of each other. We want to see people taking their crypto and their Bitcoin off of exchanges, but does Bitcoin always just move to the upside when this happens? I want to get a different perspective on this data. I went over here on CryptoQuant to an exchange net flow. And exchange net flow is the difference between Bitcoin flowing into and out of the exchange. So it's inflow minus outflow equals net flow. So I wanted to get a different visualization perspective of this headline. And so I brought up this chart, and this is what we're looking at. We want to see it in red. We want to see these red bars because when they're green, this high value increasing, according to this, this high value is kind of alluding to increasing selling pressure, right? So in green, these bursts is what we do not want to see. It's increasing selling pressure. Now to the downside, that's what we want to see. We want to see the net flow to the downside in red. And you can see this is September 29th. You can see this nice burst. Now, historically, if you just kind of take a glance, this is a year-to-date chart. If you look back, last time we got a move like this on this net flow chart was kind of back in mid-June, June 16th, right here. Nice big red candle on this chart. And then prior to that was middle of May, May 13th. And then prior to that, all the way at the beginning here was January 3rd or 4th. So when that happens, as it has happened most recently, September 29th, did Bitcoin just make a move to the upside? Was that bullish for Bitcoin? Well, we already know the story considering pretty much all of 2022, we've been in a bear market. So let's actually go look at those dates on the Bitcoin chart. So here we are today. We obviously got that inflow chart, that nice big red candle falling below right around here. That's what most recently happened. And look what happened on June 16th when it happened. We see Bitcoin kind of sideways a little, a lot of volatility, and then a breakout to the upside. We have May 13th. It also happened. We have sideways consolidation right in between the 50-day and the 20-day moving averages, and then capitulation. There was no massive bullish breakout after that happened. And again, this is May 13th. If we go back to this exchange inflow, net flow chart, you can see May 13th, there's that nice big red candle, very similar to the one we just got September 29th. And you can see what Bitcoin did after that, right? Sideways into resistance and falls. We go back to January 3rd. Again, beginning of the year, you can just see Bitcoin didn't even have any bullish momentum, not even sideways trading. Bitcoin just kind of fell, right? And not only that, we see that the 20-day moving average was actually crossing below the 200-day moving average. So just right off the bat, we can just prove that this data, that headlines like this, they don't automatically lead to bullish moves. In the macro story of Bitcoin, it's bullish. This is what we want to see. But on the shorter term, especially in the bear market, right? Right now it's a bear market and people are kind of starving for hopium data points. It's very, very dangerous. And there's things we need to be careful of outside of just those bullish data points. It's one bullish headline. There are so many different tools in the arsenal that we use to really get an idea of, well, how strong is Bitcoin right now? What can we anticipate? So now we can kind of dive into the charts and talk about this. And by the way, everybody, before we do, a lot of this, what we talk about, this macro mindset, is something that has been kind of foundational to my approach to crypto. A lot of you have asked me to put together a course just about TA and everything that I do here. I finally did it. I'm launching in 15 days. I just want to bring this up because I'm really excited about it. And for anybody that joins the program and joins the course, I'm giving away Coinplate, which is a metal seed phrase storage, and a Ledger Nano S Plus. I'm extremely excited because these two things are also just offline, outside of TA, outside of my macro approach to crypto and everything that I do here on this YouTube channel. These things are important. Just seed phrase storage, offline storage of your crypto. These things are all part of the arsenal. It's all part of the plan. So get on the wait list. I'll put a link in the description. You can put your just name and email just to get locked in. I haven't released the pricing of the course just yet, but this will get you on the wait list and this will get you locked in so you receive the Coinplate and the Ledger when we do launch if you join. And here's kind of a quick glimpse of the course itself. And I can't say it enough. I put so much time into this and I really want this to offer value to everybody. So I'm happy I finally did it. And just if you're interested, get on the list, and I think it's going to be a start of something cool. So back to the TA, we can kind of dive into this now. And this is where all the tools in the arsenal do start coming together, which is to say, right now, we see Bitcoin 20-day moving average, approaching the 50-day moving average. Let's just give the benefit of the doubt that this headline proves true. And in the short term, this is just a bullish sign, and Bitcoin's getting ready to move, and we're going to get a move to the upside. Well, let's look at that. This is the case. We're kind of obviously in this this descending triangle, lower highs. I kind of, in my view, see just this lower trend line, which is this general vicinity of support for Bitcoin. So descending triangle, Bitcoin approaching the apex. We know when we get close to the apex, 70% or so, we start getting ready for a breakout. So let's just say the bullish move is in. Let's say 20-day moving average, we get the move away from it. We get it through the 50-day moving average right here. Bitcoin's breaking them. We're approaching this trend line, and it doesn't put in a lower high. Let's say it doesn't do that like it did previously. Let's say Bitcoin actually breaks up and out. For context, this is the area to be careful for of a breakout or a fake out. Go to the weekly. This is what we're looking at. Let's zoom in on the weekly chart. We have two areas. Number one, the 20-week moving average, right around 22,000 to 22,100. Number two, the 200-week moving average, right around $23,500 or so. So basically $23,500 to $22,000. We go to this chart. This is that red box. This is a daily. We just looked at the weekly moving averages. Those are the moving averages, that red box right there that we want to be careful of. So Bitcoin's moving on this daily chart, breaking 20,000, 21,000. 22,000, 23,000. It's breaking out of the triangle. People are getting very bullish, but entering this extreme resistance area on the weekly. What happens? This could play into the case for, number one, something that we wait for in these patterns, which is a throwback to the trend line, a throwback to the apex of the triangle. And number two, this could be setting up for a busted pattern, meaning we get the breakout in one direction, hits resistance, breakout fails, and actually makes a move and breaks out to the opposite direction and hits that target instead, a busted pattern. These are the things that we need to anticipate. We're in a bear market. We need to anticipate bear market things. There's fun and excitement in just tracking Bitcoin and talking about breakouts and talking about Bitcoin exiting the bear market. But the macroeconomic landscape of things right now, it doesn't offer too much hope into that case right now for Bitcoin. It could happen. Who knows, right? We're going to track that, but it's way more wise, I would say, to anticipate worst case scenarios to the downside in bear markets. We're in a bear market. So let's say that doesn't even happen. And let's just say Bitcoin actually proves it wrong. Maybe it hits a resistance, comes back down for the throwback that we anticipate anyway, and actually makes a move to the upside and actually hits the target, $30,000. Let's say that happens. Well, Bitcoin over here on the weekly chart, once again, maybe it breaks these two moving averages. That's great. However, we still have the big one, the 50-day or the 50-week moving average in blue. So Bitcoin could be breaking these areas, and while it's doing that, the 50-week moving average moving down towards Bitcoin, Bitcoin meets it while hitting the target right here at $30,000, and then there's the resistance. Bitcoin falls back down. This plays into the bigger story of how long this bear market might last. This plays into the bigger story of why we need to just be patient, why we shouldn't buy into short-term headlines, why we shouldn't be swayed by the emotional aspect of these markets, and why we should not be swayed by one single data point. We have to bring it all together. And obviously, we're digging into the charts from a technical analysis perspective as it kind of mixes with headlines like this. But even on top of these things, there's all these other data points and all of these other tools that we can use that says, hey, Bitcoin bottom might not be in yet. And even the target to the downside, actually, of this triangle, we see here in that $11,000 to $12,000 range, we've already identified that as a potential bottom for Bitcoin under this long-term macro 786 line. This yellow line that you see there is a macro 786. So it's a last bear market low to bull market high right here, and then back down 78.6%. Back down. Under this area is where historically we see Bitcoin bottom. And we've identified that $12,000 range as a potential bottom area for Bitcoin in a capitulation environment. And this is something that has played out in previous bear markets. It would not be surprising. Interestingly enough, we have a pattern in play. There's no guarantees that this will play into that, but we have a pattern in play with almost a direct target to that capitulation area, right? And this could go into next year. This doesn't have to play out like this, right? So we can kind of take all of this data for what it's worth. We can use it and apply it to our macro-minded approach to these markets. But at the end of the day, nobody knows everybody. This is obviously not financial advice. I'm just sharing my opinions with you. But let's take these data points. I think this is bullish in the long term. Exchange outflows seeing a significant uptick. But in the short term, we already see that that's not always the case in the short term. That doesn't always lead to bullish moves in the short term. So be careful with those headlines. Hopefully this data has proved valuable to you. I appreciate you. Hit that subscribe, hit that like. I'll see you in the next video. God bless.